Hello, my name is Thomas Lloyd and this is Top Mexico's Investors Club. Today we're going to take a general overview at my investment formula here on the Excel sheet, which will allow you to measure the value of your initial investment over the years here in Mexico. The formula englobes all aspects of the risks and benefits of investing in a property, especially tailored for Mexico. Let's dive into this right now. The first step is to gather all the information of your property. That means the name of the development, its address, what type of property is it, the size and number of bedrooms and bathrooms, and year of the construction. The most important part, however, is the purchase price and all its variables. Make sure to fill out the information on the neighborhood and the location scorecard to have a more accurate record of how the return of your investment will increase over the years. Okay, on sheet number 2, this is where we're going to fill out your financial information. We're not going to go into detail here, but it's important that you detail all the financial loan percentages to see how much you will have to pay back to the bank or your loan lender, including their interest. The next sheet will detail out your mortgage payments over the years. Remember, the purchase price is not really what you'll be paying for your property unless you pay full in cash. Other parts to consider are the acquisition costs, such as the closing costs. What percentages are you paying towards your lawyer, the bank trust, the notary fees, taxes, and others? Now that you've outlined all your initial expenses, we're going to have the fun part of this, which is figuring out the income, expenses, and projections of your property. How much will you be renting it out for? What would you charge for a short-term rental in comparison to a long-term rental? What other rental income, such as parking, storage, and vending, will you be able to earn? These details will give you the gross operating income of your investment. Then we need to look at the expenses of maintaining a rental property. The biggest expense is your rental management. You will need to hire a company to look after your property, whether it is for short or long term. Other expenses required are electricity, gas, water, sewage, HOA, maintenance, repairs, insurance, supplies, and anything else that requires having a fully functional home ready to be rented. Another expense not many people usually consider is advertising. While many services are free, such as Airbnb, paid advertising will give your home a much bigger exposure, which will result in a higher occupancy rate, the ultimate goal of an investment property. In your expense budget, consider this for a higher occupancy rate. And so we get to our income projections. What increases will you see? For example, the annual rental income rises over the years anywhere between 1% and 2% of your original price. Other increases you'll see over the years is the expenses and the annual rate of appreciation of your property. Everything that we just went over before leads up to the cash-on-cash ROIs and the cap rates, and the projection of how much you will earn on your property in the first year compared to the next 2 years, 5 years, and even up to 10 years. Okay, now on the next sheet, it's basically what we call the cap and the cash ROIs. Now on this sheet is basically a report of everything that we've been collecting in regards to the financial information. Here you're going to capture all of your gross operating income, the information like your rental income, short-term or long-term, what you expect to be able to rent. This sheet is basically what I call the one that you do on the run. This is information you could capture directly onto the spreadsheet. This also includes all of your operating expenses, your property management fees, your HOAs, utilities, etc. Now, with a sum of all of this spreadsheet will pop out your net operating income. And with that NOI, you're able to look at your cap rate. And that's what we're looking for. We need that cap rate in order to compare the different properties. Now, a couple of more formulas in here, and it will pop off your before tax cash flow. And with the before tax cash flow, then we'll be able to look at a cash on cash ROIs. Now, those are the two basic statistics that we're looking for in order for you to be able to compare the different properties. Now, the next sheet that we look at, basically the same thing, but this is all automatic. You don't capture directly onto the sheet. Everything that you've been collecting over the weeks and months in the previous sheets, this all does it automatically on this sheet. So we hope this spreadsheet will be very helpful for you when you're looking to invest here in Mexico. That wraps up our video for today. Make sure to follow us over the next few months to get into further detail about our spreadsheets. We will be interviewing experts in the field to give you all the insider knowledge to invest in Mexico. My name is Thomas Lloyd, and this is Top Mexico Investors Club. Make Mexico real estate your business. Hasta luego, amigos. Muchas gracias. See you later.